The best time to buy a great dividend stock is when everyone else is ignoring it. This past month, a Dividend Aristocrat that's paid out increasing dividends for 41 years dropped like a rock. And I'll show you why that might be a gift. Plus, we're going to talk about 3 great dividend stocks yielding over 4% that are gushing free cash flow and just might be able to build you generational wealth. Let's get into the June market update. June 2025 was a strong month. The S&P closed up 4.2%, and the market sentiment indicator said that we finished the month in greed mode. That's the same as in May. But here at Compounding Dividends, we don't chase momentum or hot stocks or greed. We look for great companies that we can buy at attractive prices. And this past month, a few opportunities opened up. Now, the biggest decliner in our investable universe was Brown-Forman. This is the iconic maker of Jack Daniels. And there's a few things that have weighed on the stock. Number 1, slowing sales. Number 2, increasing costs. And number 3, there's more competition from craft spirit makers in the market. Let's see. The stock declined over 14% this month, and year to date, it's down 24%. But if we zoom out, this is a company that's raised its dividends for 41 years in a row, and it's currently at a 3.5% yield. That's the highest we've seen in over a decade. The 10-year dividend CAGR is 6.3%. They have almost a 22% net profit margin, and the forward PE is down at 16.8. So if you believe that declining alcohol consumption is a secular trend, this might not be a great business. But if you think that people are going to want to buy Jack Daniels and other iconic brands, then this might be a great company to look into. And it's got a few other things that I like about it as well. Number 1, they're really strong in premium brands. And number 2, this company is still family controlled. So this is still a company that can think long term and make decisions that are in the best interest of the company and of the family, not necessarily the short-term shareholders and the market. I looked through our buy, hold, sell list, and I found 5 stocks rated buy with a 4% or better starting dividend yield. And these all have strong fundamentals. In this video, I'm going to share 3 of them with you. The other 2 are reserved for paid partners of the Compounding Dividends newsletter. And if you want to become one, use the link in the description. There is a coupon code there for you. So let's get into the fun stuff and look at the 3 stocks that I found. First up, Nexstar Media Group. Wall Street's been kind of obsessed with the whole streaming wars thing as of the past few years. You know, Netflix, Disney Plus, Hulu, Paramount Plus, Peacock. You know, the question is, which of these streaming services will become dominant? How many will become profitable? Which ones will fail? Well, some smart investors have been ignoring all of that and just collecting 4% or better yields from America's dominant broadcaster. And that's Nexstar Media Group. These guys have over 200 stations and a pile of digital assets. Now, these stations are all local, so think local news, that sort of thing. They're affiliates of, large companies like NBC, Fox, that sort of thing. They do have a virtual monopoly on local news and advertising that Netflix has a really hard time matching. And they generate a pile of free cash flow. Currently, they pay out a yield over 4%. It's about 4.2%, and the payout ratio is below 35%. Over the past 5 years, the average dividend yield has been below 3. It's been about 2.8%. And as a bonus, when election season hits, this thing gushes free cash flow. It's like a broken ATM. It just prints cash because everyone wants to advertise to the voters in the local areas. And the best way to do that is the local TV stations that Nexstar owns. Next up is Paccar. These guys make Peterbilt and Kenworth trucks. You see them all over the interstate. And these are premium products in the trucking world. And they are the backbone of the economy. But what most people don't realize is that this is a very conservative and cash-generating business. They've paid out dividends consistently for decades, and they regularly pay out a special dividend at the end of every year. There's currently almost a 5% yield on this company. It's about 4.8, including the special dividends. And the regular payout ratio is below 20%. It's 18.6. Now, the 5-year average dividend yield on this company is 3.7%. So it looks like you could get a good deal on a dominant trucking company. Last up is Sanofi. This is a European pharmaceutical giant. It's listed on the Paris Exchange. And they have a 30+ year dividend streak. Now, that's kind of rare in a European company. A lot of them tend to pay a very high dividend, and you'll see a dividend cut every once in a while when the business doesn't do well. Sanofi hasn't had that. These guys are heavy in vaccines, and that's probably part of the reason why demand for them tends to be somewhat steady. The current yield is 4.2%, and the forward PE is 10.1. The payout ratio is high on this one at the moment. It's 89.3. But the 5-year average dividend yield is below 4. It's 3.8%. So it does look like you're getting paid to take the risk. And as I said, they've got that 30+ year dividend streak intact. They're not going to want to lose that. So there you have it. 3 of my favorite dividend picks for July. These are all global powerhouses under some sort of pressure, but they all generate a lot of cash flow, and I think they all may be undervalued income streams. And if you want to see how buying a stock with a high starting yield and some dividend growth can really compound your wealth, I did do a video showing the power of dividend compounding, and I also built a spreadsheet that you can get in the description. Just use the link, and you can put in your starting yield, your dividend growth, how much you're investing, and you can really see how your wealth will compound over time. In addition, the link for the discount on the paid membership to the Compounding Dividends newsletter is in there. And let me know in the comments, which ones of these would you buy? Do you think they're holds? Would you sell any of them? And if you found this useful, don't forget to like the video and subscribe to the channel. We'll do some best buys every single month, and we'll see you in the next one.